We get the second read on GDP coming up later today. The first read, it led to a sell-off in the markets. I want to ask you, this GDP report, in your mind, what does it mean to the Fed?
Look, I think this is one of a set of building blocks that has to fall into place to get the Fed the kind of conviction that they need to make a move. You've heard from Bostic yesterday, but many others, that basically they're many months away from making a decision to cut, if one occurs at all. So I look at this and even tomorrow's data as just basically another building block, but not necessarily definitive one way or the other. They want to see many months before they decide what to do. And so this is just one of many months worth of data they're going to have to see to make a decision.
I just want to be clear, Roger. So the first read was 1.6%. The estimate for the second read is 1.2%. So you're saying if it comes in softer, that would possibly lead the Fed towards the cuts that a lot of people are looking for.
It might, but I think the main thing here is time frame. So yes, it might lead, but I don't think the market should get itself wrapped up in the expectation that it's a done deal. You heard from Bostic. He's looking at the, quote, fourth quarter. Others have said several months, many more reads. So I think this is a data point, not the definitive one. And I think that's where the market has got to get itself a bit more aligned with the Fed. They are not in any hurry to make a decision, because the first quarter numbers were uniformly in a direction that made the cut question, much more remote. And I just don't think, a little bit of realignment is going to be sufficient to change the narrative of many months down the road. So think okay. Third quarter, maybe fourth quarter, more likely.
Okay, what's your expectations for PCE tomorrow? The estimate is 2.7%. As we mentioned before, that would be the lowest read in quite a bit. If it comes in line or possibly softer, how does the Fed view that? And I know many months is what they're looking for, but this could possibly be the start of that trend that a lot of people are looking for.
It could be the start of the trend, but recognize that at the end of last year, there was a great deal of confidence being expressed, and then we got three, bad reads in a row. So your emphasis on could be the start of the trend, yes. Is it definitely the start of the trend? We don't know. It'd be nice if it comes in at the 2.7. I wouldn't be surprised if it's a little higher than that. I think inflation is pretty sticky right now, but fingers crossed. Let's see. But as you point out, start of a trend is not necessarily decisive, because we've seen a bit of a head fake in the past.
Yeah, one report, certainly not a trend. I asked you about this before. I want to get your take on the rise in oil prices we've seen in recent days, and also the real spike. It's not a rise, it's a spike in commodity prices. How does the Fed view that? I mean, some of that is just out of their control. You can't really cut that with rate cuts necessarily, oil maybe, but the commodity prices are being fueled by the so-called AI trade. How does the Fed view that?
Look, I think it's part of a picture of an economy that is actually really strong. It's part of a picture of inflationary pressures that exist in different pockets. And so for those who are putting all this together, particularly oil prices, as you know, the question is that really a question of overall macro strength? Similar, you haven't mentioned it yet, but labor markets have shown overall strength as well. So I think one puts all of those together and says, maybe the slowdown picture and the slowdown story is not really being validated by every bit of data around as we look at it. And so it's part of a phrase, I think a few of them have said, mixed data. That is on the other side of the perhaps things are slowing, perhaps things aren't, and perhaps supply and demand dynamics are such that there's still some inflationary pressure still in the system, and oil might be an indicator of that.